Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have the CEO, Peter Londa from Tantalus Holdings. Tantalus trades on the TSX Venture Exchange under the symbol GRID. The company is currently trading at $1.76 with about 44.6 million shares outstanding, or about a $78 or $79 million market cap. I'd now like to hand it over to Paul Andriola.
Trevor, thanks a lot. Peter, happy to have you with us here today. I actually had the pleasure of meeting you, I'm going to say almost a year ago at a conference, so I got to know the business a little bit. You've seen an explosive move in share price recently, so happy to see that and happy to find out what you think's going on. But this is always a great opportunity to get to know the business, firsthand from the likes of yourself. So I'm going to hand it over to you. You've got a presentation. Would love to hear a lot more about Tantalus.
Sure, Paul. Thanks for that. Nice to reconnect, and Trevor, thanks for the setup here. My voice coming through clearly?
Perfectly.
Okay, terrific. So. Good afternoon, everybody. I appreciate you allocating some time to learn a little bit more about Tantalus Systems. As Trevor mentioned, we're on the Toronto Stock Exchange under the ticker symbol GRID. Our company is headquartered just outside of Vancouver in Burnaby. We also have offices down in the United States where I am today. And we'll do our best to try to provide a brief overview of our company, what we do, and certainly allocate as much time as possible for questions. At a very high level, we are a technology company with a very specific purpose, and that is to help electric utilities modernize their distribution grid. For those of you who may not be too familiar with the electric utility industry or the grid itself, the distribution grid is the portion of the electric grid that is in our neighborhoods and in the towns and communities we live in. It's from something called the substation, typically a lot of equipment behind chain link fences, with a lot of wires coming in and a lot of wires going out. And from those wires, like a spider web, down the streets through utility poles and ultimately connecting all the way either to the homes where you may be working today and streaming from, or from an office building. So our focus is from the substation down to the electric meter where we live and work. To that end, we've been able to scale our business quite nicely. Today, as of yesterday's earnings report, which we shared our results through 2023, we support 288 utilities. The vast majority of those are down in the United States. We do support a few utilities up in Canada and a few down in the Caribbean basin, but our primary geographic focus and market opportunity that we're pursuing is in the US. For point of reference, there are about 2,900 utilities in the United States, so we're at about 10% of those utilities in the market. In terms of some of our financials, yesterday we reported some record results for the company. We set the highest amount of revenue, or delivered the highest amount of revenue in our company's history at $42 million. You'll see the US, apologies for that, but we report in USD. So converting that into Canadian dollars is about 55 million Canadian, a little give or take a little bit on either end of that. Within our revenue mix, we have a combination of what we refer to as connected devices or hardware, and we have software and services. And to that end, another record for our company in terms of historical performance. In 2023, 35% of our revenue came from software and services. Within that mix of software and services, we have recurring revenue. We set an all-time high for recurring revenue generated in the calendar year 2023. It represented 24% of total revenue, so a subset of that 35. Looking forward, we do report our annual recurring revenue. For us, we're reporting a 12-month forward-looking view. So we've come into this calendar year with $11.5 million of annual recurring revenue. And in terms of our gross profit margin, given that we have hardware and software and services in our revenue mix, we also set another all-time high for our business, delivering 52% gross profit margin in 2023. It's the first time our company has delivered a gross profit margin over 50%. It's been a long time, or a long-standing objective of our management team to achieve that type of gross profit margin. And from our perspective, it's that gross profit margin that we have been improving and increasing every year, despite inflationary pressures and other macroeconomic dynamics that are unfolding in today's economy. But it's that gross profit margin that we see as an opportunity to really drive operating leverage and profitability from our business moving forward as we scale. While it's not on this slide, just while I'm on financials, we delivered neutral adjusted EBITDA in 2023. That includes $5 million of very targeted R&D investment in a new offering that we're bringing into the market with a first mover advantage. And that really is what I think is driving the recent uptick in our share price, as well as a few block trades that expanded the float without really diluting our shareholders. To give you some perspective on how large the opportunity is that we are chasing, it is a $2 trillion problem to modernize the electric grid in the United States. It is enormous. And then as we think about where the electric utility industry is, this isn't just boastful commentary, right? It's an industry that in many circumstances still relies on an individual meter reader walking up to the side of somebody's home and writing down on a piece of paper some hieroglyphic, what looks like scrambled letters and words to track what the bill should be that a utility ultimately delivers to their customers once a month. And to give you some perspective of that, about 25% of the utilities in the United States today manually read their meters. If you think about every other industry in modern society today, there's not one that is as manual as the grid. Healthcare, financial services, education, entertainment, you name it, right? All of those industries have fully digitized. The grid, from our perspective, and the electric industry is the last frontier. And so that's why we are very much focused on helping utilities migrate their existing assets and make intelligent investments to modernize the grid. When we think about what does grid modernization mean, there are a couple buzzwords that come with it. The Grid Modernization Initiative in the United States has been clearly defined by the Department of Energy, and that mandate and that initiative filters down on a state-by-state level here in the US. To that end, things like resiliency. How does a utility prepare for an increasing number of extreme weather events? And regardless of the view on climate change and global warming, that doesn't matter. What matters to the grid is that we're seeing an increasing number of extreme weather events that have horrific impact on infrastructure, and from that put people's lives and their homes at risk. So resiliency is one of the most important components to grid modernization. Reliability is another one. Without power, none of us are on this call today. And if somebody loses power, unfortunately, while we're on this call, right, you're no longer capable of participating. So reliability is becoming an increasing area of focus for utilities, because the way the economy's worked and the notion of hybrid work environment, right, people need reliable power, whether they're at home or in their office building. I won't go through all of these, but another one that has gained significant attention, certainly with investors, is sustainability. There are mandates to decarbonize our society for a lot of good reasons. And those mandates are filtering down to the electric utility industry, which today predominantly relies on coal, gas, and other carbon emitting fuels to deliver power. As utilities look to solar and storage and wind, while all of those have great influence on sustainability, they also have a dramatic impact on the reliability of the grid and what's happening with transformers and power lines as voltage and current fluctuate. So that's kind of where we play, is helping utilities improve their resiliency in the face of Mother Nature, reliability, so that we all have power where and when we need it, and ultimately helping utilities reduce their carbon footprint. As we have helped now 288 utilities begin their journey down the path of modernization, what we have learned over the years, and we've been doing this now for a few decades, but what we've learned over the years is there's one real problem, and that is ultimately accessing interoperable data. As we walk through this presentation, as you learn more about what we do, right, a big chunk of our effort and our solutions tie to smart, intelligent devices and how we get those installed under the glass of a meter, on a utility pole, a sensor along a wire, devices inside the substation. A lot of companies are very good at delivering devices like we are. The real challenge is, how do you make the data from all of those devices interoperable across every silo of the utility? And so as you think about Tantalus, I like to say we are a hardware-enabled software company. We're kind of like your iPhone. We're the edge computing for the utility, and we're also the embedded software on that device to ensure that we can copy and paste what we get from Shopify when I buy something and validate that it's me using a credit card. Right? Two-factor authentication, you got to copy and paste sometimes that code. And so we're doing that similarly for the utility beyond authentication. But how do we take data from a device that's focused on one area of the utility and make that data similarly available to other areas of operation? It is not an insurmountable issue that utilities face today, and ultimately has created a fairly significant opportunity for us. So the way we do that in delivering interoperability is through a platform, and we call that the Grid Modernization Platform. There are a couple layers to our platform, and I'm going to click through these quickly in the interest of time. But as I'd mentioned, our primary focus initially when we engage with a utility and start talking about data and modernization, more often than not, it ties to a device. Where does that device go? What does it do? What type of data does it access? How much does it cost? How long will it be in the field? And the reason for that is because utilities, they're asset consuming animals, right? They like to own infrastructure. It ties to their economic model. It's a CapEx driven model, especially here in the United States. Buy a lot of infrastructure, get a rate recovery with a defined and guaranteed rate of return. And so because the utilities are in that mindset, right, we meet them where they are. We work to convince them that we're the right partner and that our devices can help solve specific problems. Underlying that effort, right, and the core of it is, how do we then get data from those devices to the utility through a communications network, make that data interoperable across their operations? We call that the grid data management layer. It's like a middleware layer. For those of you who may be familiar with enterprise systems, it's very much like a middleware layer. And then we stack software applications and data analytics with machine learning on top, all with the idea that data from devices is solving an increasing number of problems for the utility. How our platform lays out in terms of solutions. The history of our business and the history of the utility industry has been very much focused on automating devices and aspects of the distribution grid from the substation down to the meter. As we've looked to expand the business and grow. And the automation in what we do, the solutions we offer are all sort of, I'm just going to build this out, it's a little bit easier, but are all like the $42 million of revenue that we generated in 2023, all on the left side of this page. As you learn a little bit more about our business, or to the extent you've been tracking us, we've been communicating and providing updates on the device that's in the middle of this page called the TrueSense Gateway. I'm going to come back to what this device does and how powerful we think it is and where the opportunity lies for Tantalus. But it is a device that for the first time is helping electric utilities install something outside the home at the meter socket and send their own communication signal into the home, not relying on consumer Wi-Fi, which is ripe with cybersecurity issues for utilities, but send their own communication signal into the home to control a variety and an increasing number of applications. We've recently announced a strategic partnership with GE Appliances, and that relationship and partnership ties to bringing their flex capacity water heater, pictured here on the slide, into the utility industry, such that a utility can turn that electric water heater into a thermal storage device, reducing carbon footprint, as well as what we refer to as a demand side flexibility device or a load management device. So to give you an example, storm is approaching. With our technology on the side of the home, the TrueSense Gateway, utilities can send a signal down to our device. Our device then communicates to GE's water heater to the extent it's in the home, and the utility can preheat that water to 160 degrees Fahrenheit, very hot. What GE's done is put a mixing valve that they've patented on the top of that water heater that guarantees the water coming out mixes with cold water and is delivered at 120 degrees Fahrenheit, plus or minus 1 degree on either side. So it doesn't inconvenience the customer, the homeowner, the landlord that has the water heater, right? No risk of burns or damage to the individual, and no inconvenience. 120 degrees is the average water temperature that water heaters effectively deliver here in the US and up in Canada. By preheating that water, utilities can then, with the push of a button, through our technology integrated to GE's, is turn the heating element off. And with the insulation in that water heater, that water tank will keep water hot up to 120 degrees over a 6 to 7 hour period. It translates into 5 kilowatts of controllable load with the push of a button. And so two things, a couple benefits there. In the event of a storm, utility can preheat the water, and in the event power is knocked out, the home has hot water for at least 6 or 7 hours. The average outage is just a few hours, so more than sufficient time. In the event of a super hot day with a peak load, in the US, air conditioning, water heating, right, all kinds of demands, stress on the grid, preheat that water before the temperature rises to 90, 100 degrees Fahrenheit, 32, 35 degrees Celsius outside, and then take that water heater off the grid, right? De-stress the grid, power that doesn't need to be delivered in a controllable and a very granular way. So that's the type of things we're doing with GE. Further, as we think about sustainability and reliability, right, utilities are scrambling to figure out how do they integrate rooftop solar? How do they prepare for power walls? How do they prepare for my recently purchased F-150 Lightning pickup truck when I charge it at on the side of my house? And I use that example because it's a really good one. When I plug my truck in to charge the vehicle, it doubles the amount of power that the utility has to deliver to my home. It's substantial. And so what impact does that have for the utility? Well, the meter on the side of my home starts to heat up. The power line connected to that electric meter starts to heat up. The insulation breaks down. The pole top transformer across the street from my house and on my neighbor's property, which was installed in 1988, starts to heat up. And if I'm using more power and my neighbors are using power, right, that pole top transformer starts to stress. And when pole top transformers stress, best case scenario for the utility, like a fuse inside your house, it pops, power goes out, outage to 7 to 10 homes. Inconvenient, but concentrated. Worst case scenario for the utility, that transformer explodes. And so with data from our device, we can not only provide utilities with the direct control, engaging with consumers, someone like me, economic incentives to turn on and turn off or pre-charge a car, send me a signal that there's going to be a peak event, a storm, change my behavior patterns, turn on, turn off the water heater, preheat it so I'm not inconvenienced, but de-stress the grid, and then track power quality measurement with our device as well to protect that transformer. So it's extending the edge of the grid, which we see unfolding in spades across the United States and in portions of Canada, where we think this new device ultimately leads to accelerating grid modernization efforts for the utilities. Underlaying that all is our software, our grid data management software. So how do we take data from an EV charger and deliver that all the way to the supervisory controls of the utility so that the utility once and for all is truly digitized, has a full appreciation of what's unfolding in the grid, and most importantly, figure out where do they need to spend money as they start to upgrade, given the fact that this is a $2 trillion problem. So those are the types of things we're working on. I'm gonna, in the interest of time, I don't mean to make people nauseous, but I'm gonna fast forward a few of these slides, have some build, just to give you some sense of where we are. We've been communicating the progress that we've been making with this TrueSense Gateway device. It's been in development now for over 2 years. Through our earnings that we shared yesterday, we are $11 million of R&D into the device. There are a few versions of the device, but first to market is a fiber connected gateway. We shared yesterday that as of March 13th, we have cleared through all of the safety testing through what's called UL, Underwriters Laboratory. If any of you sort of pay attention to the TVs or your phones or electronic devices inside your home, more often than not, there's a little white sticker with the letters U and L, black bold letters. In order to get that sticker, companies like Tantalus spend months and months and months getting the device certified to make sure that when this device is connected to the grid inside a meter socket, it's not going to catch on fire. It's not going to cause damage to other assets. It's going to do what it's supposed to do relative to how it's rated. So we've been working on that for some time, and we were really pleased to be able to share yesterday that of March 13th, we've completed that testing, and we're now just waiting for the formal letter of certification. From that letter of certification, we activate field trials with 8 utilities that have been helping us build this product for the last 2 years. And from there, scale. So we're really excited as we kind of just getting to the end of R&D in bringing this to market. The certification ultimately allows us to really start to accelerate field trials and initial phases with the utilities, 8 of them, that have been working side by side with our engineers over the last 2 years to bring this into market. I'd say through continued research, outreach, feedback in the market, we have a first mover advantage on delivering this product. And from what we can gather, we have about an 18+ month advantage. So the goal is get through certification, get as many utilities activated with field trials and pilots over the next 6, 8, and 12, 6, 9, and 12 months. And from there, start to scale. What we've learned through the 288 utilities is if we're successful getting utilities to adopt the device, we create an immediate barrier to entry for our competition for at least 15 years. And during that period, we've gotten pretty good at accessing data and then monetizing that data through recurring revenue. So that's the type of stuff we're working on. To give you some sense of what that means in terms of scale, again, I'm just going to fast forward quickly. The 8 utilities that comprise our advisory committee that have been working with us for the last 2 years, in full deployment, represent an incremental $150 million USD of revenue opportunity to scale our business over the next 5 to 7 years. Mind you, we still have a base of business at $42 million that's growing. So this is additive to what we've already been doing. The broader opportunity is substantial, and how to sort of get our arms around what otherwise is about $1 billion of opportunity in front of us. We have actively engaged with about 25 other utilities beyond the advisory committee of 8 that are awaiting the certified products that we're bringing to market here, the TrueSense Gateway. If all of those 25 utilities were to move forward in the deployments and the scale that they have communicated to us through our sales process, that would represent another $350 million of opportunity. So back of the envelope, we've got about $500 million already identified and in some form or fashion working through our sales process. I don't mean to miscommunicate. That's not backlog today. It's identified opportunity to scale the business with active sales activity unfolding. And of that billion, or excuse me, of that $500 million, 150 lies with the 8 utilities that have been working with us for the past 2 years to bring this to market to solve their problems. A few quick items in terms of our financials. I'll share our revenue model. A lot of bars and colors on this. So to simplify it, the goal is simple. Convince a utility we're the right partner and the reliable partner to them. Get devices like our TrueSense Gateway or our edge computing module deployed with utilities. Once those are deployed, as I've mentioned, they're typically there for 12 to 15 years. And so while it's a one-time sale on the hardware, we then, from that device, lock into, every device has software. We get a perpetual software license on that device. That perpetual software license kicks off a 22% annual recurring maintenance contract with it. So immediate recurring revenue for that 12 to 15 years. And as we get smarter about data analytics, as we invest and expand in our software capabilities, right, figuring out how to monetize that data over time and get to an increased amount of recurring and repeatable revenue per device per year. So that's kind of the way we stack, and the TrueSense Gateway aligns really well to this. A couple of quick highlights. 2023, as I'd mentioned, we set a few really key milestones. I've covered most of it on the left side already, but highest revenue in company's history, highest gross profit in our company's history, highest percent contribution from software and services, highest percent contribution in recurring revenue. The recurring revenue for us is growing at about 19 to 20% a year on a compounded annual growth rate over the last 6-7 years. We continue to win new utilities based on the core of our business, what we've been doing for some time. The TrueSense Gateway that I've spent a lot of time on today is additive to what we're already doing. And to kind of give you it's sort of a disaggregation of how our revenue maps out, I'm just going to fast forward to 2023 results. You can see about 42 million and change USD. Of that, about 27 and change on the connected devices. That's what locks in the long-term relationship with the utility and creates the high barrier to entry. And almost $15 million of revenue last year in software and services. Of that 15, over 10 is recurring. And going into this year, as I had mentioned, we already have $11.5 million of recurring revenue that's been invoiced for 2024. In terms of balance sheet, we're in pretty good shape. Entered this year with $5.2 million of cash on the balance sheet. We collect the vast majority of our annual recurring revenue in Q1. So we kind of get a slingshot at the beginning of every year to help support working capital that we can manage. We've got about $4 million of availability under an EDC loan. We have the ability to pull that money down through the end of this year, at which point it's just a term loan that has straight line amortization for about 5 years starting in 2025. We also are pretty good at managing our working capital. We've negotiated terms with suppliers and vendors where our DPO, our days payable outstanding, is about 90 days. And our collections with customers, utilities, is about 45 to 50 days. So we kind of get a lot of flexibility within our working capital as we think about scaling. So we think the balance sheet, well, could always be stronger and arguably has a little bit too much debt on it from my perspective. It is sufficient to help us get this new product into market and start activating deployments towards that initial $150 million of opportunity with our advisory committee. As you look for things to track for us this year, obviously getting the TrueSense Gateway into the market, the UL certification, announcing the first set of wins with utilities, announcing progress on field trials and field trials to deployments. You'll see obviously some follow-up on the recent announcement on GE Appliances as a strategic partner. And earlier this quarter, we announced the launch of our first true machine learning, AI-capable data analytics tool that's focused on helping utilities protect the transformers. In a few quick weeks here, 18 utilities within our existing customer base have opted into a SaaS offering for that analytics tool. So adding to what they already purchased from us on a full year basis, it's an incremental $300,000 of recurring revenue. And we're just getting started there in terms of marketing that capability across the 288 utilities we support. That's the gist of it. I'd say from a capitalization perspective, pretty clean, 44.6 million shares outstanding, all of which is common stock, no dilutive securities, no warrants underneath that. That could create a hangover effect. About 75% of our stock is held by institutions. About 17-18% is held by retail. The balance is held by management, directors, and insiders. But it's pretty clean. We have 5 covering analysts. And apologies, this image has not yet been updated. It's kind of through before we saw the precipitous improvements in our share price. But you can see we have 5 covering analysts: Beacon, Canaccord, Cormark, Haywood, and Paradigm. Through updates that they issued yesterday, their notes consensus is at $2.70. And while we've seen a decent uptick in our share price, and I'm a buyer today, in my one day between blackouts of 2023, audit, delivering earnings yesterday, and going into Q1 reporting effective tomorrow with the market being closed. So from our perspective, we're still trading at a pretty significant discount to our peers, and certainly pretty significant discount to consensus. Last but not least, beyond myself, I'm really fortunate to be part of a phenomenal team. And I won't go through everybody here, but to call out one name, the chair of our company is Laura Formusa, former CEO of Hydro One, experienced executive, among the most accomplished female executives in the North American utility industry. She ran a $20+ billion company. We're very fortunate to have her stewardship, and certainly for me, having someone available like her to help think through how we scale, how we address problems that are unfolding with some of the largest utilities in Canada and the United States, and certainly get a lot of benefit by having her as our chair. Paul, I did my best to try to get through this quickly. Hope I didn't go too long, and I've left enough time for Q&A.
No, I listen, I think you did a great job, because I think it lessens the need for Q&A. You're very detailed, so I appreciate that. Always makes my job a lot easier. I don't have to look as smart and ask questions. Let's start with one question. First off, before I jump into the questions, again, remind everybody, if you got a question you'd like me to ask Peter, just use the chat function, and then I'll read it and ask the question. It sounds like you've had a tremendous year. Certainly, the market's starting to respect what you guys are doing here. But as with all businesses, nothing's smooth sailing. What do you find are your greatest challenges, and sort of what keeps you up at night?
Thanks. My gut reaction is my 17-year-old daughter, who's driving my wife and I crazy. So that's number one. Number two, work-wise, Paul, we've got a really compelling opportunity. A lot of hard work by our team to identify a real gap in the market, helping utilities not only understand what's happening behind the meter at my home as I start to charge a vehicle, but also understand how does that impact power quality, and from there, what does it mean for the assets the utility has to manage. As we start to think about, from the core of our business, and we're scaling. We're adding, 17 utilities last year, on average 20 if I look at the last 7 or 8 years. And so I think the team has gotten really effective and very efficient at finding the utilities where our technology solves a serious problem and then locking into those relationships. What's keeping me up at night is how do we stay grounded as a management team and as an organization relative to staring at what is a very tangible $500 million revenue opportunity. And this is not my first rodeo. It's the second time I've had the chance to be CEO of a company in this space. The last one was in the US, privately held. Instead of going public, we engaged Morgan Stanley to lead a sale process, and we're very successful in selling the company to a huge organization called Danaher Corporation. But I've been in and around this sector, broadly defined smart grid, since 2008. And prior to that, investment banking and merchant banking, where I was corporate advisory and also putting money to work on behalf of investors. And I've seen a lot of times where smaller, I wouldn't say early stage because we're not, but I think of us like that. We're at the early stage of doing something really transformative. And I've seen this play out where companies get really excited and they get over their skis, and it's kind of ready, fire, aim when they're bringing new technology into the market. And we've got some of that enthusiasm, and it's hard to dial it back because we're seeing an increasing number of utilities approach us about the TrueSense Gateway. I think what's keeping me up at night is how do I keep our team grounded? How do I set expectations with folks on the phone here, investors, right? I mean, we got to be very systematic on bringing first, right, as a first mover advantage, new technology into a market. And we're selling to an industry that typically has an allergic reaction to new technology, really conservative. So how do we make sure we execute flawlessly, meaning the R&D, we're pretty much done. Certification, pretty much done. We got to ramp up production and make sure our manufacturer builds this properly. I think we're pretty good on that. And then our customer operations team, how do we educate the utility? Make sure it's installed properly, make sure data is integrated appropriately, make sure their team knows what it does. And so those are the things that we're working on. We'll be working on those all this year. So we won't see a lot of revenue ramp this calendar year, partly by design. We'll build 5,000 of these. I think we'll get all 5,000 deployed or something pretty close to that by December 31st. And that'll give us an opportunity to make sure, did we get it right? Do we need to tweak what we're doing? Do we make modifications in the factory? Do we need to enhance the training materials and the way we're introducing this to the utilities that want to adopt it? From there, we'll sprint. So it's trying to just keep a lid on it, if that makes sense. It's keeping me up at night. It's a good problem to have, I would say that, but it is a challenge for a small company. And order of magnitude, we shared this yesterday. It's not unrealistic that this company doubles in size by 2026. The question is, how do we make sure we absorb that and are well positioned to execute on it?
Yeah, I mean, is so much talk about the electrical grid lately, and so much more electrification that's going on right now. It really feels like you guys are sort of at the center of the storm, and I can appreciate trying to handle all the opportunities and trying to stay focused. That would be a pretty big challenge for a company of your size. You sort of spoke to a little bit about the comps, the comparables that are out there. Maybe give us a sense, where you stand in terms of the competition. Are you the big player? Are you the small player? Is it fragmented?
Yeah. I'm gonna sorry, without coming out of this and creating issues with screen share. Let me just sorry to make everybody dizzy by scrolling quickly. Let me go back to sort of the solutions. Sorry, I was itchy trigger finger there. I went a little too fast. I've lost my own space where we are. Sorry, bear with me. Here, okay, stop touching the mouse. So on the left side of this slide, we have historically focused on public power and electric cooperative utilities in the United States, and there are public power or municipally owned utilities in Canada. And I'd say, even though we're relatively smaller in terms of financial scale, at $40+ million of revenue USD, in terms of market share, we're actually pretty solid. So where some folks that look at us, a lot of the history, I'll put one in my hand here. It's not on the screen, right? But this is an example of what we build. This is if we were to break open someone's iPhone, if someone wanted to volunteer here and come on camera and snap open their phone, we'd see something like this. It's a PCB board. And within that, you'll see this little square, right? That is our custom ASIC chip. It's a microchip. More often than not, the history of our business has been putting that intelligence, right? The plastic on this is the face of a meter on the side of someone's home. And so more often than not, we've gotten, I think, confused with the largest meter manufacturers in the world, who we partner with. Itron, Landis+Gyr, Aclara, now owned by Hubble, Census, now owned by Xylem, Elster, owned by Honeywell, right? So we rub elbows with monster businesses. So to that end, when you look at our revenue versus an Itron, one of the largest meter manufacturers in the world, several $1 billion of revenue, we're pretty small. When we look at market share, we're actually pretty good. So that's sort of the left side of the page. Where we're taking the business and where the real growth engine comes and where we get very excited is the right side of this page. And it is a fresh canvas. There have been utilities and some vendors that have tried to use consumer Wi-Fi to do demand response, controlling a Nest thermostat. That's why it's on this page as an example. It's not very unique. What we're doing by combining power quality measurement, all of the metering capabilities, plus this direct utility communication into the home with partners like GE Appliances, it's very unique. And so to that end, we are first mover. The only other company that we've really seen that is doing something similar is this small little EV company called Tesla. Maybe you've heard of it. No one really knows who their CEO is or maybe knows what he's thinking, right? But Tesla has come up with a device. It fits into a meter socket like ours does. They're not selling it to the utility. What they're doing is they try to convince a homeowner to install the rooftop solar shingles that Elon Musk is trying to bring into market. Very cool, by the way, extremely expensive. No concept of ROI, but for some people that are deploying it, that doesn't matter. But right, rooftop sink shingles, at some point that price point will come down and other vendors will come in. Their power wall and their EV charger. And through the app on their phone, if anybody on this webinar has a Tesla, a really slick app, right? Open it up and you can see where the power is going and you can kind of track how much the power wall is charged, how much power is available, where that power is kind of going in the home and what applications are using it, where's the electric vehicle. So Tesla is doing this as a way of thinking about taking a home off the grid. We're doing something really similar, but we're doing it in partnership with the utility. And more often than not, what Tesla is doing, they're still in test mode, by the way. They're not fully commercial. They're creating a sub panel and a sub meter socket that sits behind the electric meter. So it's on the consumer side of the electric configuration inside a home. We're actually on the utility side. And so the intent from our perspective is the super wealthy, the 1%ers that will automate their homes, that will deploy, be more often than not the first adopters of trying to reduce their carbon footprint, of course, of a 20,000 square foot home, right? So it always gives a chuckle on that one, but right, I mean, that's where Tesla's market is. We're trying to go mainstream through the utility and give the utility the ability of engaging with middle income, lower income, call them upper class, right? Where here's a free water heater. In exchange for that, you're reducing your carbon footprint, you're helping the environment, and we can give you incentives, $500, $1,000, $2,000 off your power bill. That may not mean a lot to individuals on this call, depending on personal wealth, but in middle America, middle Canada, it's a lot of money. And by the way, no interruption and no inconvenience, and they get a brand new water heater. So there's a real good economic model. And when we think about affordability as part of that grid modernization, one of the components of modernization, right? Affordability and equitable access, that's where we're playing. So I like the fact that Tesla's there. I like that they're kind of validating what they're trying to do with all of their cool stuff. We're going to have a broader ecosystem, and we're the first to market with the utility industry. So the answer to your question is, I hope we are the market leader with the TrueSense Gateway for modernization. The proof will be in the pudding, obviously, as we get this rolled out.
Now, speaking of the TrueSense Gateway, I mean, where exactly does it sit on the grid? I imagine it replaces the sort of the meter we have right now. And then give us a sense of economics. What does it cost, and what does it cost you guys?
Yeah, so I scroll this. So this is sort of a CAD drawing. Most people will recognize a meter socket on the side of their home, metal box, different colors depending on where you live, and then the electric meter, right? We all have one of these if we live in a home. What we do is we sit in between those two things, and it's called a meter socket collar. So the good news is for utilities that we're working with, we don't, I mean, if they have one of our edge intelligent devices that I held up in my hand, great. But if they don't, no problem. And I love this example. We've got a meter from 1957 built by Westinghouse long ago. And the reason why I reference that is one of our directors is a former COO of Westinghouse who was responsible for their power and energy business long ago. We got one of those old meters. We have taken a 1957 meter and we have digitized it. We have turned it into what otherwise is a compatible, intelligent, smart device today. The utility doesn't have to pay for it, right? They just take that meter out of a socket. And by the way, there are still those devices. The house I grew up in, Elizabeth, New Jersey, my dad still lives, has an old Westinghouse meter on it that the meter reader comes and reads once a month. And I don't live in I grew up in Elizabeth, New Jersey. If anyone's flown into Newark, that's Elizabeth, right? This is industrial, a man of the people, right? So it's urban. And so what we sit right between that existing meter and that existing meter socket. It retrofits in. So that's kind of where we sit. The economics of it, we're still sort of playing with that. And I'd say we don't publicize this. We have channel partners that are going to take this into the market on our behalf at a certain price. For the advisory committee utilities that we're working with that have been helping us build this, sort of the clearing price is about $550. It's a little bit on either side, depending on how big the utility is and how aggressive they're going to be in rolling things out. About $500 for the piece of equipment itself, the device, and then $50 license for the software, the initial software that's embedded on there. That then triggers a 22% annual maintenance contract on the software license of $50. So about 10 to 11 bucks recurring revenue per device per year thereafter. I think I covered both of your questions there.
Yeah, no, perfect. And then another question that's come in here is in regards to, well, you guys have been a public company for a number of years. Maybe just talk about the financing sort of history of the company, when you guys did go public, and any immediate requirement for further capital right now.
Yeah, so I'll just leave this image up instead of distracting folks by trying to fat finger this on my mouse to get to the right slide. But so we went public in February of 2021. Canaccord, Genuity, and Cormark Securities were our lead bankers. We raised ballpark 10 to 11 million Canadian in our go public transaction. It was a reverse merger into a shell company, newly formed shell company called RiseTech Capital out of Vancouver. The CEO of Well Health was part of that group. A few other longstanding and well-respected folks in the capital markets out of Bay Street were part of that organization. So it was a clean shell, no history, no baggage, most importantly. So we rolled into that on the TSXV. It was a fun kind of time for us because we actually had approval from the TSX to be on their exchange before we actually got it from the venture exchange. So we uplisted very quickly. We sort of activated trading in the transaction with the capitalization early February of 2021. We cleared through our first audit as a public company and then immediately uplisted to the TSX where we sit today. We did a follow-on financing in August of 2021 with a prospectus. Canaccord and Cormark supported that as well. We raised about another 10 to 11 million Canadian. I'd say we were a little bit lucky on that because we raised it, got fully capitalized before sort of the tech small cap sector imploded in Canada. And so we were fortunate that we got capitalized at a good time. We have not done any other financing since that, other than managing debt facility with EDC and Comerica as senior lenders. And in terms of where we sit today, our view is we have adequate capital and flexibility on the balance sheet to bring the TrueSense Gateway into market, to get it launched, to get the first utilities deploying. And so we do not have plans to raise more capital at this point in time. To the extent we start to see an increased amount of demand for the TrueSense Gateway through that next wave of 25 utilities, at some point it will make sense to enhance the balance sheet, maybe reduce some of the debt, but certainly be prepared for just an evolution of the working capital of the company if the growth rate of the revenue is really quantifiable for us. So to the extent we need more money, we do it, but we'll do that in the context of contracts in hand and revenue visibility and sort of building towards the working capital requirements of the company.
Mm-hmm. One thing I didn't remember hearing is, do you guys manufacture this, or how much is outsourced as far as production?
So no, great question. We are CapEx light, which is an element of our business that allows us to operate with what looks like probably a pretty thin balance sheet. But ultimately, we don't have a lot of CapEx in this company. We have a third-party contract manufacturer headquartered out of the Philippines. Long ago, we used their factory in China. When Donald Trump became president, for hopefully the first and only time in our country's history, in the U.S. where I live, the not to get political with everybody, but when he activated, or his administration activated tariffs on goods coming out of China, to our contract manufacturer's credit, they had us up and running in a factory in the Philippines within 3 weeks. And we've been working with that contract manufacturer for now 13 years. They have capacity, in addition to building all of the stuff they build for us today, to ramp up to about 155,000 TrueSense gateways a year before we have to start thinking about either an expansion within the factory or potentially another location within one of the other 15 factories that they have globally. So the nice thing with our contract manufacturer is all of the components, all of the effort that goes into manufacturing, it sits on their balance sheet. They invoice us the day the product leaves the factory. So that's why we're kind of CapEx light.
Mm-hmm. Fantastic. A couple more questions here. One, just so the TrueSense Gateway clearly seems like a major catalyst for you guys. What other potential catalysts, or maybe even milestones, metrics, whatever you want to call it, should investors really pay attention to understand that you guys are sort of executing on your business plan?
Yeah, so I think the gross profit margin maintaining, at and around that 50%, that means we have a lot of operating leverage in this business to really build sustainable profitability. So that's a metric we pay very close attention to here at the company as a member, as an executive team. The recurring revenue is another good metric, right? If we're successful in securing new utilities, and we are successful in convincing those utilities to deploy more and more connected devices, right, it should lead to an increasing amount of annual recurring revenue. So that's another metric that we pay very close attention to. We track that, internally, weekly, in terms of reporting quarterly. And so continued progress towards increasing recurring revenue is a good testament, I think, to first, our ability to convince utilities to deploy more, new utilities and existing. Second, retaining those utilities. If a utility kind of takes off and goes to another vendor, all of a sudden they're not paying us some of the fees post contract. So, it's a good barometer for us, and I think great illustration of executing on our plan of getting devices in the field and then monetizing the data. We're going to be really excited on progress that we make with the transformer analytics. As we think about harnessing the power of data, how do we go from 18 utilities to 100 utilities using our transformer analytics? So that'll be another metric to track. Are we able to sell these advanced capabilities to the existing customers? And then obviously the progress and the announcements on the TrueSense Gateway. There's probably 3 or 4 things, a few financial metrics and a few commercial items to track.
No, plenty to keep eye on here. Peter, just generally, sort of what have we missed, if anything, or more importantly, what do you want to make sure everybody walks away with as far as a key message today?
I don't know if I'm prepared for that question. Thank you. So I'll freestyle a little bit.
Yeah, absolutely.
What I'd say is we ain't a cannabis or mining company, right? This is a fairly complex technology platform company selling to an industry that no doubt spends a huge amount of money and has a significant problem that needs to be solved in terms of modernizing the grid. And so I'd say as we, to the extent we have support as shareholders on the phone, webinar, or to the extent that you start tracking us, I think it's understanding that the progress that we'll make, it's deliberate, and bringing out a new product like the TrueSense Gateway it takes time. It's a lot of R&D up front, a lot of expense that's run through our balance sheet. That's why we've been negative EBITDA, and we've been communicating that. You take the TrueSense Gateway off of our business altogether, we're EBITDA positive since we've been public. We can track that dollar for dollar. So I think we've been pretty deliberate on where we've been spending money, or I should say investing money. And as we start to, continue that investment in the first half to get these 3 products in the market, we had 18 consecutive quarters of positive EBITDA going into and reporting as a public company. We deliberately made the choice to start investing dollars to bring the TrueSense Gateway to market because of the opportunity that we saw. As we get it into the market, we'll see that reversion back to consistently generating positive EBITDA. And I think that is probably the best barometer for shareholders to track to see how we're doing as a team. Are we sort of leaning too far ahead of our skis and putting the balance sheet at risk? Or are we actually controlling what we can control to bring new stuff to the market? And I think that's where we are. So it's an exciting time for us, for sure.
No, I agree. I mean, it looks like it's an exciting industry, as much as it's kind of old school and sort of utilizes old technology. It's ripe for opportunities for companies like yourselves. And it sounds like you guys have a significant amount of things to look forward to in the next 12 months here. So we will definitely be keeping a close eye. Congratulations on how far you've taken the business so far. And we certainly look forward to seeing what you guys can do over the next 6 to 12 months here and longer. So Peter, thank you so much for joining us today. We've been speaking with Peter Londa, CEO of Tantalus Holdings. Symbol again is GRID, GRID, on the TSX. Peter, can't wait to catch up with you in the near future.
I'll look forward to it, Paul. Thanks for the time, and I appreciate everyone's attention today. Have a great afternoon.
Thank you. Bye for now.